4% down in the first quarter, break even by the first half. And now the portfolio hit a 12% return for the first 9 months of this year. The turnaround is even more amazing for my US portfolio as it reverses from a 20% loss in the first quarter to a 10.6% gain now. That's a more than 30% gain in just half a year. If you are wondering, the returns shown include a forex loss of about 6% due to the stronger SGD. In USD, the gain would be 16.6%. Now let's dive into the individual markets and stocks. Surprise, surprise, I'm taking a lead over the S&P 500 ETF again. If this continues until December, I'll beat this monster index for the third consecutive year and in 4 out of 6 years since 2020. I am obviously pleased with this progress and it gives me the confidence to continue my stock picking journey in the US markets. For this year, markets reacted positively to the robust performance of my top 2 stocks, Arista Networks and Shopify. Despite markets trending down in the past week, their share prices are up significantly by 22% and 27% year to date respectively. This is further boosted by my strategic actions in first half, where I took advantage of the lower prices to initiate a position in Ulta Beauty and double my position in Alphabet. Consequently, my Alphabet holdings are up 28% and my confidence in Ulta's new CEO is rewarded with an impressive 45% return. And yet Ulta is still not my top US performer. That honor goes to Zscaler, leading the race with an amazing 50% gain. Its renewed growth momentum and above estimates guidance for the next fiscal year received the market's approval. On the other end of the spectrum is The Trade Desk, where its below expectation results and guidance saw its share price plummet. Unlike Lululemon Athletica though, where I realized a 44% loss, I am holding on to my current stake as I remain convinced of its longer-term growth story. However, having already invested a 5-digit amount in Trade Desk, I won't increase my holdings further. Switching gears to the local market, what used to be an index that I beat easily, STI ETF has become a tough nut to crack in recent years. It is up 17.6% this year, and that's on top of last year's strong 22% return. Besides DBS Group, this year also sees the likes of ST Engineering and Singapore Telecommunications contributing to this superb performance. While my SG portfolio continues to trail STI ETF, it has kept pace with the rally during the past quarter. The market reacted positively to iFast Corporation's strong growth, propelling it from a top loser in my SG portfolio to the top gainer within a quarter. My timely accumulation of Amova STC R8 in May benefited from the positive sentiment towards S-REITs due to the expected rate cuts. In the percentage category, the Hourglass is the surprise leader. While the exact reason behind its strength is unclear, its share buyback program and low trading volume may have contributed. Improved results, anticipated ramp-up in the coming quarters, and successful secondary listing in Bursa Malaysia saw the surge in interest in UMS integration. As for AM Holdings, it's simply a secondary effect of the announced US $5 billion deal between Nvidia and Intel. Here's the icing on the cake. The view from the other end isn't too bad. Besides the realized loss from the divestment of the 3 Mapletree S-REITs, even my bottom 3 performers are in the green. What more can I ask for? The final round of quarterly reporting for this year is coming soon. I'm expecting positive momentum from most companies, even though management will probably continue to express cautiousness in the current topsy-turvy environment. While markets will digest these latest developments, its temperament means stock prices can move in any direction. For my current situation, these are the actions that I will take. If prices fall, I will simply hold my current stakes. If markets stay exuberant, I will take the opportunity to trim my positions further. My plan remains simple. Stay disciplined, let the winners run, and remain ready to take action as the final quarter unfolds. Thank you so much for watching. If you found this helpful, don't forget to like, share, and subscribe. See you in the next video.